There's a country that prints money whenever it needs to. It borrows trillions and never really worries about paying it back. It's been predicting its own collapse for half a century, and somehow the rest of the world keeps lending to it, trading in its currency, and treating its promises like they're made of gold. That country is the United States. And if you've ever wondered why the dollar is still the world's reserve currency, despite everything you've heard about American debt, Chinese ambition, or the rise of digital alternatives, the answer isn't what most people think. It's not about trust. It's not about military power. It's not even about oil anymore. It's about plumbing. Let me explain. Right now, as you're watching this, roughly 88% of all international transactions involve the US dollar, not because people love America, not because the dollar is stable or backed by anything tangible, but because the entire global financial system is built on a network of pipes, and almost every pipe runs through New York. Here's how it works. Imagine you're a business in Japan buying electronics from a company in Germany. You'd think this transaction has nothing to do with the United States, right? Japan and Germany, two sophisticated economies, two advanced currencies. But here's the thing. Most of the time, that deal gets settled in dollars. The yen gets converted to dollars, then the dollars get converted to euros, and the whole thing clears through American banks. Why? Because there isn't enough liquidity in yen-euro trading pairs. The infrastructure doesn't exist, so even when the US isn't involved in the transaction, its currency is. This isn't an accident. It's the result of a system designed at the end of World War II in a small town in New Hampshire called Bretton Woods. In 1944, the world was broken. Economies were shattered, currencies were worthless, and the US, holding 2/3 of the world's gold reserves and the only major economy left standing, made the rest of the world an offer. Link your currency to the dollar, and we'll link the dollar to gold. Stability in exchange for dependency. It worked for about 30 years. Then, in 1971, President Nixon did something remarkable. He ended the gold standard, just canceled it, told the world the dollar was no longer backed by anything except the promise of the US government. And everyone panicked, obviously. But they didn't stop using the dollar. Because, by then, it was too late. The infrastructure was already in place. The debt markets, the commodities exchanges, the correspondent banking system, all denominated in dollars. Unwinding it would have been like trying to change the operating system on a computer while it's running. So the world kept going, and the dollar, now backed by nothing but faith and momentum, became even more dominant. Here's where it gets interesting. Today, the US makes up about 25% of global GDP, but the dollar represents nearly 60% of global foreign exchange reserves. That gap, that difference between economic size and monetary influence, is the source of what economists call exorbitant privilege. It means the US can borrow money more cheaply than anyone else. It means it can run massive deficits without facing the kind of punishment that would cripple other countries. When the US needs cash, it issues treasury bonds, and the world buys them. Not because they're a great investment, often they barely keep up with inflation, but because they're liquid, they're safe relative to alternatives, and most importantly, they're needed. If you're a central bank in Asia or Europe or Latin America, you need dollars to stabilize your own currency, to buy oil, to settle trade. And the easiest way to hold dollars, US Treasuries. So you keep buying them. You have to. This creates a feedback loop. The more the world uses dollars, the more it needs them. The more it needs them, the more the US has power to print them. And the more the US prints, the more the rest of the world has to absorb. It's a beautiful trap. Now you might be thinking, what about China? They're the second largest economy. They've been pushing the yuan for years. Surely they're a threat to dollar dominance, right? And yeah, China has tried. They've set up swap agreements with dozens of countries. They've launched the digital yuan. They've created alternative payment systems to bypass the dollar. But here's the problem. Nobody trusts the yuan the way they tolerate the dollar. The dollar isn't trusted because America is virtuous. It's tolerated because the US has deep, liquid financial markets, because you can buy and sell massive amounts of dollar-denominated assets without moving the price, because US courts, however imperfect, are more predictable than the alternatives, and because, critically, the US doesn't control who gets to hold dollars. China does control the yuan tightly. If you're a foreign investor or a central bank, that's a problem. You can't move money in and out freely. You can't hedge risks the way you can with dollars. So even countries that dislike US foreign policy, even countries that want to diversify away from the dollar, they hesitate because the infrastructure isn't there. The trust isn't there. And infrastructure, that takes decades to build. This is what people miss when they predict the dollar's collapse. They focus on debt levels, on deficits, on political dysfunction, all real concerns, but they ignore the fact that the global economy doesn't run on sentiment, it runs on systems, and the systems are all built for dollars. Consider oil. For decades, people said the dollar was strong because oil was priced in dollars, the so-called petrodollar system, and there's some truth to that. But it's backwards. Oil wasn't priced in dollars because the dollar was strong. The dollar became the pricing mechanism because it was the most liquid, widely accepted currency. It was convenient. Even now, as some oil producers accept yuan or euros, the underlying contracts, the derivatives, the hedging instruments, they're almost all dollar-based because that's where the market depth is. Or take sanctions. When the US froze Russian central bank reserves in 2022, it sent a shockwave through the world. Suddenly, holding dollars felt risky. Countries started talking about diversification, about reducing dependency on a currency that could be weaponized. But 2 years later, dollar dominance has barely shifted because the alternatives are worse. The euro is fragmented across 20 countries with different fiscal policies. The yuan is controlled by Beijing. Gold is hard to move and harder to spend. Crypto is volatile and unregulated. So central banks complain about the dollar, and then they keep using it. Here's the uncomfortable part. This system, this exorbitant privilege, it comes with a cost. For the US, it means running a permanent trade deficit, because when the world wants dollars, the US has to supply them, and the easiest way to supply them is by buying more from the world than you sell, which means manufacturing jobs leave, industries hollow out, entire regions decline. The privilege isn't free. And for the rest of the world, it means living with someone else's monetary policy. When the Federal Reserve raises interest rates to fight inflation in the US, it doesn't just affect Americans. It pulls capital out of emerging markets. It strengthens the dollar. It makes debt more expensive for every country that borrowed in dollars, which is most of them. So a decision made in Washington ripples across the planet, and there's nothing anyone can do about it. This is why people keep predicting the end of the dollar, because the system feels unsustainable, because the imbalances keep growing, because at some point the math has to break. But the question isn't whether the system is fair or sustainable, it's whether there's a better alternative. And so far, there isn't. The world didn't choose the dollar because it's perfect. They chose the dollar because everything else is worse. And until that changes, until someone builds a financial system as deep, as liquid, as trusted as the one that runs through New York, the dollar will keep running the world. Not because it's strong, but because the pipes are already laid. And nobody wants to rip up the floor. So the next time someone tells you the dollar is dying, ask them this: what's supposed to replace it? Till then, goodbye. Take care. Wait, please like and subscribe.